Welcome back to Power CEOs Truth Behind the Business. If you're just tuning in, you're going to want to go to nowmedia.tv, click on shows, go to Power CEOs and catch the first half of today's episode. It was epic. We dove deep into AI and everything you need to know regarding AI literacy and ethical utilization. We are now going to shift gears. And you have written to me, you have asked, I am answering. You've got questions. You're wanting to partner with private equity. You're wanting to know what questions to ask. I've brought you the perfect person to chat about this. Alice Chen, partner at Pender Hastings Capital, is all things living the PE life now. But she has a legal background and she was an entrepreneur with multiple companies. So she is the perfect person to ask as someone who is a founder who has had exits, as well as somebody who is playing on the capital side. Welcome, Alice, to the show.
Thank you. Thank you for having me, Jen. A pleasure.
Alice, you've sat on all sides of the table. You've got a legal background, you're a founder, you're an investor, now you're a partner. Let's break down what most founders don't know to ask about private equity partnerships because you have seen it all.
Yes, yeah, let's unpack that. I mean, selecting the perfect private equity partner is like selecting your partner in marriage. It's a big deal, So you want to really give yourself the time to meet as many parties as possible. So what you're asking yourself is what do they bring besides capital, right? There's a lot of dry powder out there wanting to invest in really valuable companies. So if you're a founder that's built an amazing company with great enterprise value, what you want to ask is, okay, how are you going to treat my company, right? Because your company is your baby. And what are we going to do together? What are the synergies? What can we co-create together, right? So sometimes private equity firms are acquiring your company as part of an acquisition platform. So if it's a platform acquisition, they're looking to combine what you have built with other complementary companies in a vertical or in an ecosystem. So I think what you want to know as a founder is, well, first of all, is it going to be a complete exit or is it going to be a partial exit? If it's going to be a partial exit, or if you have terms like earnout, if you have terms like performance and those kind of variables, then you want to understand, well, what is it that you bring to the table as a capital partner, right? Besides the capital. So what kind of value can you add to this that I've created? How can we co-create something that's more than, like that's more than the individual components. So I think those are the questions you want to ask.
Are there any red flags for founders? Because right now we're seeing you're right, we have a ton of dry powder. There's a lot of roll up activity happening. Are there any red flags that founders should be watching for in term sheets or in these conversations?
Yeah, for sure. I mean, a lot of these kind of technical issues, there's a lot of available resources out there. If you just even type in GPT, I'm looking to sell my company of this industry or this type to these type of private equity players. What are the due diligence questions as a founder I should ask, right? So those are the technical questions that are pretty readily available for you to look at. But I think what I want to suggest is that you want to look for an alignment, right? So especially if it's going to be a partial exit, then or a growth capital that you're taking in, that's going to be a big chunk, and they're going to have controlling interest, or they're going to have a lot of influence over how you're going to continue to grow the company. Then you want to look for alignment. Do you have values alignment? Do you have work style alignment, right? Do you actually like these people, right? They're going to ask the same things of you. So it's like a dating process. So you want to make sure that you can see yourself working together synergistically in a pleasant style, in the pleasant co-creation type of situation for the next, I don't know, 5 years, maybe longer than that, right? So these are the type of questions. They're common sense, but a lot of people, they focus on all the technical stuff, but they ignore these kind of fundamental pillars, which I think make or break a relationship and a PE investment.
Oh, absolutely. And we know that, the greatest businesses in the world can falter because of poor partnership. And the partnership's almost always because of people. when they have those challenges. And so I'm going to ask you, because you've exited, you've gone through the process, you've worn that founder hat a few times. What was your biggest mistake, and what lesson did it give you that you now bring into everything that you do?
Yeah, so I think I learned the hard lessons that I was just talking about. In my early days, as a startup founder, you're looking for partnerships that complement your skills. So instead of hiring, because maybe as a startup you don't have ample funding, so you're trying to hack around that by being in a partnership. So I actually personally went through some painful lessons of misalignment in partnerships that kind of didn't end so well. So I would say that is like the first and foremost thing that you have to make sure that your goals are aligned, your values are aligned, your work styles are similar, your communication style or skill sets are complementary and similar. So I think those are very fundamental things that you just simply can't ignore.
So I'm gonna address the elephant in the room, right? We have a very extensive audience, and you are a very strong, powerful female, and you have no problem talking about these things. However, women in general in the founder space are really hesitant to talk about money openly in peer circles that are co-ed, or even in all women circles. And we have a lot harder time gaining capital or pitching investors, especially. What advice would you give to female founders so that they can start to normalize these conversations, get comfortable with them? Maybe it's a mindset shift, but what can female founders do to elevate their, I don't want to say financial literacy, because I don't know that it's financial literacy, but their ability, their confidence in the boardroom and beyond, and especially when pitching investors?
Yes, that's a great question, Jen. I think there's a couple layers to it. So the first layer, I think it may just be a matter of understanding the language of the industry. So the language of fundraising, right? So that's just a matter of putting yourself in situations where those conversations are ample and every day, right? So start to listen to podcasts that focuses exactly on talking about money or talking about fundraising. Start attending conferences that help female founders raise money, right? Or talk about money. I'm seeing a lot of this type of movement. So, for example, I love your channel and I love your show because you're leading us in this movement. So we very much appreciate that. I just spoke at this conference called the Women and Wealth Catalyst Summit at the Golden Gate Club in California. They just did one in New York as well. So this is organized by a fellow EO member, Shama Bunton, out of San Francisco. So she is also an example of a woman that recognizes this exact problem and is doing something about it and trying to bring all the founders and all the VCs and all the fund managers into one room so the conversations can be had and can be normalized. So I think it's really just like learning a foreign language. Finance is really just language. So a lot of like learning a new language is about immersing yourself in an environment, right? So if you don't know Japanese, but you want to go to Japan and you want to have a good time at vacationing in Japan, well, what are you gonna do? You're gonna just get yourself there, and then you're gonna like you can learn some Japanese on Duolingo before your trip, but really, where you're really going to learn Japanese is by putting yourself into that situation, right? So I've kind of done that actually in Japan and also in Quebec. So I'm Canadian, and we have a government program that puts Anglophone kids into francophone environments and vice versa. So it's the same thing. So find environments where it forces you to have these conversations. Put yourself in there. Before you do that, to help yourself gain more confidence, sure, listen to more podcasts, talk to people that seem to know something about finance that you don't, right? Just there's so much content out there to digest. Like even every day on Instagram, I see so much stuff. There's a lot of influencers like Mrs. Dow Jones. There's Vivian too, your rich BFF. There's so many, like even Instagram influencers that's teaching this stuff. So just really put yourself into these conversations, and that's how you're going to normalize it.
I couldn't agree with you more. And I wanted to just just congratulate you for being a part of the movement and for sharing this too. So, folks, if you're listening and you're female and you're not comfortable in the money conversation, you have to force it. Put yourself in the rooms that you feel that are a little outside of your comfort zone, because that's where we learn and that's where we grow. And don't be afraid to reach out to other strong female founders. It's really actually kind of easy to lean in if you're going to some of these conferences that are designed for that mentorship and for that growth, to meet with some of the other people who are maybe a couple steps ahead of you. And it's a great another great way of doing this. I really appreciate that. We have about a minute before we have to break, so I really wanted to just kind of wrap up and ask you, is there anything else that you really want entrepreneurs, founders, and or female founders to take away from this particular part of our conversation, where we kind of demystify capital and get comfortable with that financial conversation?
Yeah, I will say this one thing. So it doesn't matter if you're a female or you're this or that. Like, I personally see all these attributes just as marketing attributes, right? So you are your best marketer. It's your job to learn how to market these attributes, right? So capital loves one thing. Capital loves value creation. So focus on value creation and capital will flow to you. So it doesn't matter who you are, what you are, all these different marketing attributes. You have to create something that's of so much value, and I guarantee you capital will flow to you. That's how capital works.
Fantastic. I couldn't have said it better. You heard it from the expert, folks. We do have to take a brief break, but we are going to dive deeper into what's shifting in the PE landscape and more after these important messages. The investment game is changing fast. From geopolitical changes to the rise of AI, we're seeing so much happen in such a short period of time. And Alice Chen is here with us. She's at the forefront of how private equity is evolving and what to look for. So, Alice, I really wanted to dive in a little bit and ask you, what trends are you seeing in the private equity space right now? What do we need to be paying attention to as investors? Talk to me a little bit about trends and what might be changing in this digital age.
Yeah, sure. So I will speak from the vantage point of a real estate private equity investor. So I think what I am seeing is a movement away from maybe what's popular a couple years ago. So during COVID, it seems like everyone and their neighbor started a multi-family real estate syndication. And a lot of these deals are unfortunately under the water because of the interest rate hike that took place in certain places, even are experiencing falling rents, right? So I think as an investor looking for passive income or looking to achieve financial freedom through passive investing, I think one should be more open-minded to look at different asset categories. So I'm seeing a lot of asset categories that are emerging. For example, I'm in land development, and the reason why we took 2 years to study different strategies under the sun in the United States market and decided to land on land investment or land development is because, well, one, we're looking for a big sustained problem. So I don't know if you know, but there's actually currently a 4.8 million deficit in single family homes in the United States. And this was a problem that started to pent up since the last financial crisis of 2010, right? So the national home builders like the D.R. Hortons of the world, the Lennars of the world, a lot of them are public companies. They started to underbuild in those macroeconomic conditions. And so that created this pent up supply and demand gap. And this gap is not it's actually widening. It's not narrowing, just because even in the last couple months with the uncertainties concerning tariffs and this and that, again, that continues to continues to prolong this problem. And so, as a private equity firm, we're looking for a problem that's big enough that we can solve over time, right? Because we have to apply a lot of the bandwidth and human capital and infrastructure into solving this problem. So, the second trend I'm seeing is that what's interesting is that there's no shortage in terms of the people's desires to have housing, as well as there's this trend towards worker housing or BTR, build to rent. So these are single family homes that are for rent, not to be bought but to be rented, and a lot of times they are being built around maybe I don't know, like a gigafactory of some sort, right? Maybe Nvidia, I know is spending a lot of money building in Austin, and of course Tesla, and then there's a lot of like technology or other type of big industries. They're building plants or building research centers, and so they need to have people that go there to work. And so you need to have worker housing, like adequate, comfortable worker housing where the tech workers can bring their families over there, right? And to continue kind of the company mission. But the families will have children, and you want to make sure that in that neighborhood there's actually the right kind of infrastructure of schools and playgrounds and that kind of master plan communities. So I'm seeing this trend towards BTR, build to rent communities. So that is also known as horizontal multifamily. I'm seeing trends of smaller houses being built in these master plan communities because maybe the I think the household formation numbers are maintaining, even though it seems like the younger people are having less children compared to previous generations. But it doesn't mean the number of household formations is dropping because we are encountering all kinds of permutations in household formation. There's people downsizing, the boomers are downsizing. There's also couples splitting up, going from one household into multiple households. Of course, there's still young families being formed, young professionals looking for their own starter home. So there's all kinds of combinations. So I think this trend towards worker housing, BTR, single family homes adapted towards the current demographic trends. I see that as a pretty kind of obvious trend that's happening in front of us. Another thing that I've been really kind of geeking out on, and this is related to AI, so I think you'll find this interesting as well, Jen. So if you think about it, in probably 5, 10 years, I believe that every single house will be built through a modular format, right? So these are steel frame modular homes where the homes are built in parts and pieces in a factory, right? So much like a car factory is assembling different parts of a car, and then they make a car, right? So same thing, like they're producing bits and parts and pieces of the house, and then they are then shipping everything onto the site and then doing the on-site assembly. So everything can be probably built by 3 robots in 3 days. And so if you understand that, then you need to understand the implications of that. So what does that mean for the value of the actual house, right? It's going to be greatly diminished. So that in terms of looking at real estate as an investment, then what will actually hold the value? Like what is actually a resource that isn't infinite, right? Then I think you then look at land, because land is not an infinite resource. It's definitely finite, and once you have built, throughout the land, and then that's it. You can't generate more land, right? So I think these are kind of the trends that are kind of keeping me very engaged late at night, thinking through these kind of problems and the implications for society.
Well, and what you're discussing right now, I've seen these same trends. I've been looking at it, and actually a BTR. I passed by a BTR that just recently finished development and is starting to lease nearby where I live. And you're absolutely right. We have to look at what's shifting and where it's going, and that's just an entrepreneurial view for investors. We have to be thinking longer term, and what's that? How can we leverage technology or AI to help us with some of this due diligence on the investor side? Like, what are some of the ways that investors watching this, or even founders who are looking to get into the investment game to build or generate or grow wealth? Like, what are some of the ways that we can leverage technology so we can formulate our due diligence on where we're going to put our money?
Yeah, so I'm, a big fan of GPT. I work with it every day, and I think even just typing in like the investment you're looking at, right? And then typing it in and asking GPT to generate a list of the due diligence questions. Like my firm like we have our own proprietary 8-page process when we're looking at how to or who to deploy the capital to. But you can find similar examples online, and you can just interact with AI to to basically have AI synthesize the best due diligence list that you should ask when looking at a passive investment. So be it a syndication or a fund, I think that's very informative. You can also ask AI to compare and contrast. So maybe you have decks from different investments, and then you can let GPT know, okay, well, I'm looking for growth. I'm looking to optimize for growth, or I'm looking to optimize for immediate cash flow, right? So two different buckets, like very different styles of investing. So one, you're looking to multiply your capital in a short time. Another one, okay, well maybe your return is not as great, but you're looking for that immediate drip in terms of passive income. So you have to know exactly what you're looking for, and then you input the data, you input the different selections, and then you can ask AI to help you compare and contrast and compare it to historical data, right? So you can ask it to compare fund managers in the same space, in the same asset category, and to get a sense of the comp. So a lot of the stuff that I think, analysts at investment banks or private equity firms, the stuff that they used to do, now you have your best friend, you have GPT or other AI companion. They can do that for you. So really, this knowledge is democratized, and I'm very, actually, personally, very excited about the fact that this is now democratized.
Oh, you and me both. It really is making it accessible, and it demystifies a lot for us because what's happening is we now can have access to things that we used to have to trust someone else, and they didn't necessarily always have our best interest in mind as like from an investor standpoint. So talk to me a little bit. I know you have a fund for land development. Talk to me a little bit about how people can reach you and learn more about what it is that you're doing, why it's a problem we should be caring about, and why we should be thinking about diversifying our portfolio to include land development.
Yeah, so I'll give you a very brief overview of exactly what we do. So, what we do is we're capital partners to best-in-class land developers in the country. And what's a land developer? A land developer is a company that works on either land entitlements or horizontal development. So they turn raw land into finished lots for the national home builders like the D.R. Horton, Lennars, or regional players to come in and start building houses, right? So build vertically. So we love this model because let's take horizontal development as an example. So a horizontal developer will typically be approached by one of these home builders, and the home builders, they will say, "Hey, Mr. Horizontal Development, we have this entitled piece of land. We want to build this master plan community of 1,000 homes. Can you help us with that?" Right? And so our land developer partner will buy the entitled land from the home builder at, call it, $30,000 a lot. They'll do the horizontal development, meaning putting roads and infrastructure onto this tract of land. And then when they finish, they will sell it back to the home builder at $70,000 per lot. But this process is actually papered, contracted on day one. So before they do anything, the exit's already built in, it's already papered. So talk about risk mitigation. So we really love a business model where the exit is actually built in. I mean, in my 16 years of being a serial founder, I have not seen this model elsewhere. So we really love this model because of that. And if you would like to connect with me or get more information about my fund or even education materials, I invite you to check out my personal website. It's alicechencompanies.com. Chen is CHEN, alicechencompanies.com.
Thank you so much, Alice. It has been such a pleasure. You have been a wealth of information for us. I appreciate you coming today.
Thank you for having me. It's been a blast.
And you, yes, you, unfortunately, all good things come to an end, including this show. But the good news is we'll be here same time, same station next week. Until then, win today, win this week, and I'll see you next time.